Hello, in this lecture we will continue on our comprehensive problem. We are still entering the journal entries here for the month, and we have just completed the first blue section of columns, and now we need to unhide some columns in order to keep entering some data. I'm going to make the screen larger first of all, so I'm going to go back down to the taskbar. We're at 70% right now. I'm going to bring it back up to 100%, and then I'm going to scroll over to the left, and you can see we have columns A, B, C, D, E, P, and so there's something wrong there. So we're going to have to highlight between those cells. I'm going to unhide the cells that are in there. In order to do that, we'll put our cursor on the drop down so we can highlight the entire row. I'm holding down the left click, and then I'm going to highlight over to Q since those rows are since P is so narrow. Then let go and right click on the selected area and scroll down to unhide. So we're going to unhide the area, and so now we can see 3 sets of blue cells. Now, what we want to do is I'm going to hide the ones that we have already worked on. So this set of blue cells here, we don't need those. I'm going to go ahead and hide those cells. So I'm going to put my cursor on E. They're not going to go away. They'll still be there, but we're going to hide them and scroll over to B. So B to E, E to B, let go, right click on that selected area. Make sure you have the entire row and then hide that section. All right, and then I want to hide L, starting from column L, so we can work on column G over here. So we're going to hide column L through P. So I'm going to put my cursor on column L and highlight to column P, even that little column right there, let go. Ooh, I missed P. So I'm going to go from L to P, let go, right click on that selected area, and hide. So now we want to have our information on the left, and we've got the data. We're going to put it into the journal entry section, and then we'll post it out to the general ledger as we go. So we are now on transaction 715. So if we scroll down here to 715, it says we paid cash to rent equipment needed for a job. All right, so we paid cash in order to rent equipment. And of course, the first question will be, is cash effective? And yes, it will be. It says we paid cash in order to rent the equipment. So cash has a debit balance. We need to make it go down. How do we make something go down? We do the opposite thing to it, which in this case would be a credit. So I'm going to copy this cash count. I'm going to right click on that, copy it. I'm going to put it on the bottom under the date, right click and paste it 1, 2, 3. And the amount will be in the credit column. And I'm going to represent our credits as we have through the entire sheet with a negative 75 so that we can represent credits with a bracket. When we select enter, we'll see the brackets around it. And we will then debit something for 75 as well. So it says now we just need to know what the debit account will be. And we paid cash to rent equipment. So that sounds like it's probably some type of an expense. And notice we're in order, assets in green, liabilities in orange, and then equity, and then the revenue and expense accounts down here. So if we have the trial balance, we can take a look at the expense accounts and we could say, do we see some type of rent expense? Equipment and rental expense looks like it could be the one to go with here. So that's one we will use. So expenses all have debit balances. They only go up, and we're going to do the same thing to it in order to make it go up again. So expenses will basically always be debited. So I'm going to copy that item here and put it on top in cell H5, right click and paste 1, 2, 3. So here's what the journal entry will be. Now we're going to post that journal entry out. In order to do that, I'm going to make our sheet a little bit smaller in the taskbar. I'm going to take it back down to 70% so we can see the entire sheet over here. And we're going to post the equipment first. Now the equipment is way down here. It's in the expense area. That means it's going to be way over to the right in our general ledger. So we've got our assets in green, and then our equity, and then then our liabilities, and then our equity. Then we're in our revenue and expenses, and we're looking for equipment rental. That's way over here in cell AR15. So way over here in AR15, I'm going to select equals. Instead of using the mouse, I'm just going to use my left arrow. I know this is small, but I'm going to use the left arrow all the way over, and then I'm going to find that journal entry. I'm going to point to that 75. So in the cell, we should have equals I5 if we're using the same format of the worksheet we have here. Once we do that, then in the cell we'll have 75. It'll be up in here. I5 will be the cell reference. You could just type in equals I5 or point to it as we did in the past. You could actually hard code it as well, but I highly recommend using formulas. All right, so there that is. I'm going to scroll back over here. We can see that we are out of balance, of course, by 75 now at this time until we post the other side, go into cash. Here's cash right there. It's the first account, of course, on the trial balance. We see it right there. Here's cash on the general ledger then. We're going to go in the credit side in the next sale available, which is U14 and equals and point to that 75 credit. That will make the debit balance go down because we're doing the opposite thing to it. And notice cash is the first place where we can really start to get the idea of these debits and credits. Note that what is happening is the debits are winning. If we had a race here, we would say the debits have 11,360 in it, and the credits have 5,155 in it. Therefore, the debits are winning by 6,205. So you can think of it kind of like a horse race like that. But we know that the debits always win in the assets. And therefore, the only question is how much will they win by in this case. So the debits minus the credits equal that 6,205. All right, let's take a look at the next transaction here. So we had 715 on this transaction, so now we're at 716. Going to make us a little bit larger on the taskbar once again, bring us back up to 100%. Scroll it back over, 716. Paid for a year's worth of general liability insurance. All right, 716, our question always is cash affected? Yeah, because we paid something. Paid means we paid cash most likely, or a check, and cash has a debit balance in it. We're going to make it go down. How do we make it go down? We do the opposite thing to it, which in this case would be a credit. So I'm going to copy that, going to paste that down here, paste it 1, 2, 3. Notice it's going down. Credits don't always make something go down. It's going down because cash is a debit balance account. And therefore, a credit is the opposite thing to it as what it is. All right, and so how much are we going to pay in 716? 1,000. I'm going to put a negative in the credit column. And there's that 1,000. We're going to debit something then for the same amount of 1,000. Now, all we need to do is see what that account should be. And we're going to say, insurance. Well, I see insurance here, and I see insurance here. So why do we have an insurance thing up on the assets area and an insurance thing down in the expense area? And insurance is one of those types of things that is always going to need adjustment. So if we are going to set up a system for insurance, the recommended system will often be whenever we buy insurance, we want to put it in as an asset, and then we will adjust it at the end of the month. Why would that be? Because by definition, when we buy insurance, we have not received anything yet. Insurance means we bought something for the future. We're going to get something in the future. So if we get car insurance, we're going to get something in the future. And you might think, well, I'm never going to get anything because I'm not going to get in an accident. And they only pay if I get in an accident. And that's true. You're only going to get paid if you get in an accident. But we're buying the security of insurance in the future. So the coverage is going to last in the future. So as the coverage and that security passes, that's when we should expense the insurance. So we're actually going to put it into the asset first and then expense it. All right, and so the asset has a debit balance. We know that we need to make it go up because we bought more of it, and therefore we are going to debit it. So I'm going to copy that, and we'll put that on top. And of course, we already knew we were going to debit it because we credited cash. Right-click, paste it, 1, 2, 3. All right, so there's the transaction. We want it in there just like that. Then we can post that journal entry to the general ledger. Going to make us a little bit smaller on this side in order to do that. Going to scroll over here a bit so we can see the general ledger, more of it at least. And then we can see that we have the prepaid insurance being the asset. It's what, our fourth asset over here. So it's going to be our fourth green account down here. There it is down here. We can just barely see it in X29. We're going to select equal in X29 and point to that 1,000 in I8. Then once we hit enter, it will go up here. There's our 1,000. Here it is here in the trial balance. And now, of course, we're out of balance by 1,000 because the debits are beating the credits by 1,000. Until we post the other side to the cash account, which, of course, is our top account here. There's cash. Therefore, it's our first most popular account on the general ledger. Everybody likes to be involved with the cash account. So we're going to go over here in U15 equals, and we're going to point to that 1,000 there, which of course is the opposite of the debit because it's a credit, which is going to make the account go down, put us back in balance here, here, and of course in our equation up top. All right, let's make this larger again and keep moving to the next area. So we just did 716, we're on 717. And we have completed a job and left an invoice for a client P company to be paid in the future. All right, so we did a job and we left an invoice. So is cash affected? In this case, no. We did the job, but we didn't get anything yet. Now, if we didn't get anything and we're on an accrual basis, we're still assuming that we got something. We got an intangible something. We got an IOU. The IOU is called accounts receivable. So we're still going to say that we received something when we did the job. What did we receive? We received the right to the money. We received the obligation from our client to give us the money. Therefore, we got an accounts receivable, which is an asset. It's just like cash, but it's not as good as cash. It's an asset, but we'd rather obviously have the cash than an IOU. So it is a debit balance account, just like cash, and it is going up. How do we make something go up? We do the same thing to it, which in this case would be a debit. So I'm going to say we got an IOU. I'm going to paste that 1, 2, 3 in H11. Then we're going to put the amount being 720. Then we're going to credit something for 720. If there's only 2 accounts, then if we have a debit, then we have to have credit for the same amount. The only question is, what are we going to credit then? And of course, why are people going to pay us 720 in the future? Because we did work, and in so doing, we earned revenue. So the other account is going to be revenue. Remember that cash and a receivable isn't the same thing as revenue. So cash and receivable is what we got paid in so far for the work that we did, which was recorded as revenue, will be recorded as revenue. So revenue is down here. We haven't selected revenue yet. Revenue has a credit balance account, and it only goes up. When we do work, people only generate revenue. It's not like revenue goes down. Now, net income goes down. The expenses we have to generate in order to generate that revenue will make net income to go down. But if we do work, the client only pays us. We don't pay the client unless we incurred some kind of expense while doing the job. All right, so we're going to copy that. And we're going to paste that 1, 2, 3, like so. And notice this account, both sides we like. This is an interesting account because we can see that both the debit and the credit are good. The debit is making the asset go up and the credit is making revenue go up. They're both good. Let's make this smaller and post this out to the general ledger. So here's the journal entry. Here's the general ledger. We're going to post accounts receivable. That's our second account on the trial balance. It's going to be our second account on the GL. Therefore, here it is in X9. So X9, we're going to say equals. Going to point to that 720. When we select enter, the account will go up to 720 and put us out of balance by 720. Now we're going to post the revenue over here. So revenue is down here. It's going to be down here. It's our first darker blue account. So it's going to be way over here. Here's the assets, liability. Here's the capital account in blue. And then revenue is going to be over here. It's always going to be a credit because revenue only goes up. Revenue has a credit balance. We're always going to credit revenue. So equals, I'm going to put the left arrow all the way over till we see that credit of 720. Once we hit enter, it should go up to 720. What's in that area? Cell J12 or a negative 720. Again, I would recommend using formulas. All right, so I'm going to scroll back over here, and that is that. I'm going to make this a bit larger. Let's take this back up to 100. Also note what happened to net income there. Now we have income. We have 720 of income, and we have these expenses that we've been incurring along the way. And so 720 less those expenses is the 250. That is income. That's not a loss. The brackets represent that the credits are winning over the debits. Yes, Excel sees that as a negative number and these as positive numbers, but we see it as credits beating debits by 250. Therefore, that is income. All right, now we're going to go to the next one, which is on 718 and purchase supplies. Oh, there's one other thing we want to do back here on the receivable. Note that who paid us the receivable P. So if we scroll over here, we can see that we have receivable now of 720. So if someone was to ask us, do we have people owing us money? Yeah, how much do they owe us? 720. That's great. What's the next question? Who owes us the money? When are we going to get it? Well, we can look at the general ledger to get the detail by date over here, but it doesn't tell us who owes us the money. In order to do that, we need to go down here to the subsidiary ledger. So here's the customer by customer. This is going to back up our receivable account. P owes us the money. We're just going to enter the same information that was in the GL, but instead of by date, we're going to have it by client or customer. So in T37, I'm going to say this equals and point to that 720. And now that's our only person that owes us money, so all of our customers, of course, then add up to 720. So if I double click on that, I can see how there they are.